Investors, welcome back to Green Money Momentum. I'm your friend Trevor, and we are here for Tuesday's daily talk of stock, and we'll get into the markets and all the reasons why it was red today here in a second. But first, I just want to say, as always, I greatly appreciate every single one of you who show support to this channel, and we are making a lot of progress here. I feel super enlightened right now. I have an overwhelming amount of positive vibes within my body. I just feel overall amazing. A lot of progress I have made this last week in my personal life, with my business, and with this channel. We just switched the background, and I just got a brand new mic. So for those of you who have shown support for a long time, I appreciate it. We could not have gotten to this point without all of you, and I truly feel that we are going into season 2 of Green Money Momentum. There is more to come, more improvements to this channel. The daily grind continues, and again, that would not be made possible without all of your support. I feel so blessed to be able to do this every single day. I have so much passion for the financial markets, YouTube, and for this channel. So thank you to everybody, and this is really just the beginning with Green Money Momentum. Some big improvements that just happened and more along the way. With that being said, talking about the stock market for today, overall, we did have a lot of red. And again, I am feeling super positive right now, but with a day like today, I'm sure if you go across the landscape of YouTube, or if you're listening into financial media, they will tell you all the reasons to be negative. They will talk about all the horrible things going on with the economy and all the reasons that you should sell your stocks. But I'm going to go the opposite of the grain. Again, I'm feeling super positive right now. And also, I'm feeling super bullish about this second half of the year for the markets. And if anything, to me, this is a buy the dip opportunity. Today, we technically had 64% in the losing category. When we do look at both of the major indexes, the SPY here on the left, so the S&P on the left, the NASDAQ, the triple Qs on the right, both did have a red day today, and many are freaked out because we had a red day on Friday. We had a red day to start the week yesterday, and then again, the continuation of the red. So now 3 straight losing sessions in a row when we look at the major indexes. And if we do look at the technical analysis here on the SPY, it does appear that we could be seeing the death cross on the MACD. So we could be dropping a little bit more. But again, I am not at all worried about this. Again, there are a lot of bears online that will tell you all the reasons to be negative, but I do feel that this rally will continue. And again, this is just a small dip on the overall bullish trend, the trend being your friend. The main news and articles, dominating the markets right now, all around the bond market, which to me is funny because the bond market often gets ignored. So many stock traders won't even look at the bond market, but all of a sudden, just because the long-term yields are high, everybody is talking about that. So that is the main headlines, the inflation concerns with the long-term yields, that because of all the inflation that we have seen most recently. We have seen high inflation in the CPI and the PPI. A lot of this, again, because of the energy crisis and the war going out in Iran. Inflation was already high before that, but now you mix in that scenario and inflation is even higher. So now the bond market is pricing that in for the long term. But on Friday, we do have a new federal chairman who is going to be Kevin Warsh. He is going to be sworn in at the White House on Friday. This is Trump's guy right here. He did handpick him for the federal chair spot. Right now, the markets, at least the opinions I'm seeing online, many are looking at this through an Austrian economics lens, where they think because the bonds are high, because of the inflation that we have right now and all the wonkiness, that Kevin Warsh and the Federal Reserve will not cut through the rest of the year. Kevin Warsh is in a very interesting position because we do have those factors. We do have what the bears are talking about, but also he is a brand new chairman. I'm sure he wants to set the table with some big things. And if he is aligned with President Trump's views, which is cut, 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 and print, baby, print, I do believe that we will see some rate cuts through the year. And again, a lot of bears look at things through an Austrian lens. They think that the markets need to self-correct naturally. But if we just look at the last 20 years and even further past that, but especially the last 20 years, we look at 2008, 2020, the recent crises. What does the Fed and what do the government do? Well, they print money. They consistently print money and kick the can down the road. So many are talking about this situation with Kevin Warsh, saying what a mess it is that he is walking into. But I truly believe that he is going to be just like all the other federal chairmen, just like the president, just like the elected politicians. He's not going to want the crisis on his watch, and he will help with kicking the can down the road. Today, we also did get pending home sales numbers, and we did see a 1.4% bump in April. So buyers are coming out with cautious optimism despite increasing economic uncertainty and a slight rise in mortgage rates. Demand will easily be higher, will easily be even higher once mortgage rates retreat to the levels they were at earlier this year. So a positive to see there in the housing market. And again, with the economy that we have right now, you could look at all the terrible reasons to be negative. You could look at, oh my gosh, gas is, high. There is a war going out in the Middle East, all these different reasons to be uncertain. But we got to remember that the markets are not the economy. There is a disconnect between Wall Street and Main Street. Tomorrow, we do have big earnings with the biggest company in the world in terms of market cap and the leader in technology, that is NVIDIA. They are expected to come out with a massive quarterly. Once again, I do expect for NVIDIA to either meet these expectations or beat these expectations. So long-term thought, NVIDIA does look positive in terms of the earnings tomorrow. With all the most recent NVIDIA quarterlies that we have seen each and every single time, despite NVIDIA coming out with great quarterlies, there has been a sell-off in the recent term. So I could see that being the case once again, sparking a lot of fear, uncertainty, and doubt, but a long-term thought here. If NVIDIA does come out and meet or beat these expectations, well, this just shows that there is still long-term growth. And as I've been saying recently, I do believe that there is a rotation going back into technology, AI, all these different speculative plays around, major groundbreaking technology. We've just seen most recently too, with a lot of the speeches for these college graduations, those who are speaking are talking all about artificial intelligence and how that will change our lives and how AI really is like the next industrial revolution. There has been some boos at these college speeches, but I can't argue with these big wigs that AI does appear to be the future. I could say, just as a business owner myself, artificial intelligence is super useful and really the biggest use case scenario behind all of it. The reason for AI is it's supposed to take the amount of time it takes for something to be done and compress it, right? Which is really what all of technology is about, taking something huge and compressing it. You look at these NVIDIA chips, and that is basically what it is right there. Super powerful chips, but it's all compressed into a little tiny chip. So in terms of stocks that we'll talk about today, I'll just say this before talking about stocks. I am super bullish for the second half of the year. Again, Wall Street and Main Street do have a disconnect. So while Main Street is looking at the prices of beef, of eggs, of energy, everything like that, Wall Street is looking at all of these different companies that are beating on these quarterlies. The quarterlies recently have been great for many different companies. And so right now, many different big companies are beating on their quarterly expectations. So we're going to start out here with this ETF. I a lot of the times talk about different individual stocks. That is more centered around trading, but I also do have long-term investments. And with those long-term investments, I will also invest into index funds, as they are generally safer. You have an array of stocks. You have a basket worth of stocks. And usually these ETFs do continue to rise with time. Not quite as volatile well as individual stocks. Of course, this does have Alphabet, so this has Google, this has some treasury bills in it, it has Nvidia, Amazon, Tesla, Apple, a lot of the big players. So I like this index fund right here. I also want to point out this index fund, which is a Robinhood Ventures Index Fund, and this gives you access to pre-IPO companies. And look at that right there. We have had a very bullish rip up. Most recently, at one point, this reached all the way up to $75, now down back to $50. I just bought the dip on this today. So I really like what we are seeing with RVI. Again, a actively managed index fund by Robinhood, and there's been a lot of volatility with this. With the index funds, they do go a bit slower than many different individual stocks, but with RVI, we have seen crazy rips within this play, a ton of volatility and price action. Just today alone, up by 10%. So I like MAGs. I also like RVI. If you're looking for some leverage associated with an index fund, you could go to TQQQ. This is the triple leveraged triple Qs. Just know if you are investing into TQQQ instead of QQQ, you don't get those same tax benefits, as this is a daily resetting leveraged ETF. But if you are looking to do some trading and to have some increased price action and volatility with your index funds, well, TQQQ is a tremendous play. And I like to invest into, or I should say trade with different options contracts on the TQQQ. So this is a great one right here. We also have the SPY. We have the triple leverage of that, which is SPXL. And also, if you're into the semiconductors, if you like AMD, Nvidia, but you don't know exactly what to get into, you do have SMH, which always makes me laugh because it sounds like SMH on the internet, like smug, like shake my head. But SMH recently has been super bullish. Just know here in the short term, we did just see a cross here on the MACD. So there might be some more pullback potential, but overall a great play for the long term. Also, I talk a ton about the small caps on this channel. This is the index for the small caps, the IWM, the Russell 2000. Recently having a bit of a dip, but again, I am not too concerned. I see dips as buying opportunities. This is in my long-term portfolio, so if we see more bleeding within the markets, well, I will just add more to all of these indexes, including the IWM. So with these small caps, I do believe that there could be a lot of face rip and rally type momentum this second half of the year. If we do see the money printer really start to get cranking, we see that money helicopter come down and rain money. If Kevin Warsh does indeed do what President Trump wants, which is cut, and possibly start to purchase back some of those bonds. Again, I know a lot of the Austrian economists want to see a runoff on the balance sheet. They actually want to see tightening of the rates, and it sounds like a great storyline. But if we really just look at the last 20 years, really going back even further than that, you can go all the way back to when the when gold got taken, when when the US dollar got taken off the gold standard. And you could say since that point, we have really been more Keynesian. You could even say a little bit before that, but ever since that happened, things have gotten even crazier when it comes to kicking the can down the road. I do feel that Kevin Warsh will do that with President Trump, which is a positive for us stock market investors. And I am preparing myself into great plays and opportunities while the markets are a bit bloody and consolidating currently. But I would be curious to hear what you are all doing in the comment section below. So please drop a comment. Please let me know what you are investing into. Please leave a like and please subscribe to the channel if you haven't already done so. And for everyone who is already subscribed and a loyal member of Green Money Momentum, again, from the bottom of my heart, thank you all so much for the support on this channel. This has been tremendous to do this since 2024. I really, truly feel that I am living the dream. This is a passion of mine. I love making these videos. I love doing the live streams that we have been doing. And it's so cool to see the improvements that we are making here with the background, with the microphone. And soon we'll have Green Money Momentum fully built out, and we will will have a chat room beyond just this YouTube channel. But I always do appreciate all of your support. So as I always say, this is like a trading journal of mine, but also a community that we have here. So I really do appreciate your comments. So please drop one in the comments section below. Otherwise, everyone, I should be live tomorrow for NVIDIA's earnings that will happen when the markets do close. So I hope to catch you all there. And otherwise, I will see you all then. So everybody have a great rest of your day.